All right, welcome everyone. Listen, if you've ever stayed up late and seen those infomercials promising you can buy Canadian real estate for literally pennies on the dollar, I'm going to need you to just toss those myths right out the window. Today we're diving into the bureaucratic reality, and honestly, it's way more fascinating than the hype. Welcome to our visual guide on tax sales in Newfoundland and Labrador. We're going to strip away the fluff and look purely at the official provincial rules, and crucially, how towns actually execute them on the ground. Let's get right into it. Okay, here's our game plan for this explainer. We'll start with exactly what a tax sale is. Look at the legal basis and the default timeline, then jump into the practical rules and bidding formats. After that, we'll talk about the end of redemption, which is absolutely huge, give you a practical investor guide, and wrap up with the essential risks and legal disclaimers.
Section 1. What is a tax sale? Let's define the basics.
So, simply put, a tax sale is the ultimate collection tool. Imagine a property owner completely stops paying their municipal property taxes for an extended period of time. Eventually, the local municipality has to step in. By law, they have the authority to literally force a sale of that specific property to recover the unpaid debts. Now, they aren't out there trying to flip houses for a massive profit, not at all. They just need to balance their local budgets and get back what's legally owed to the town.
But here is exactly where investors tend to get tripped up. The overarching rules, they're set by a provincial law, specifically the Municipalities Act of 1999. But the execution, that is entirely municipal. Let me be super clear about this. There is no shiny, centralized provincial website where you can just scroll through every tax sale in Newfoundland and Labrador. The transparency varies wildly. A big city like St. John's might run a really tight, organized ship, while a tiny outport town might literally just pen a piece of paper to the bulletin board at the local post office. Execution is fiercely local.
Moving right along to Section 2, Legal Basis and Default. Here's how a sale actually happens. This timeline right here shows you the chronological life of a tax debt. And spoiler alert, it never happens overnight. First, you have the default phase. This goes on for months, often years, where the owner just ignores the bills. Eventually, the municipality starts sending formal warning notices, demanding payment. If the owner still ignores those, the town authorizes a public notice, officially advertising the property. And finally, we hit day 0, the actual sale date. The big takeaway here, by the time a property actually hits the auction block, the town has exhausted every other option.
Now, because there's such a lack of public standardization across the province, finding these sales takes some serious old-school detective work. You really have to hunt for these official lists. By law, they're published in the Newfoundland and Labrador Gazette. That's the official provincial publication. But they also show up in local or regional newspapers. And, like we just talked about, sometimes they're physically tacked onto municipal bulletin boards. You definitely have to be proactive here.
And when you do go hunting, you're going to run into a few different types of documents. Let's break this down really quick. A future active list tells you what's coming up. A simple notice is usually just a brief newspaper clipping with a date and an address. But the golden ticket, that's the information package. This is the full auxiliary document package from the municipality that actually contains your tender forms and the specific rules for that town. Oh, and one quick tip. Don't confuse active listings with historical results. Historical data just shows what properties sold for in the past. Always make sure you're looking at an actionable future event.
All right, Section 3, Practical Rules and Formats. Let's look at the mechanics of actually bidding. So, municipalities generally choose between two totally distinct formats. Sometimes they'll hold a public auction. This is your classic live open bidding, usually in a town hall where the hammer falls and the highest bidder takes it. But very often in Newfoundland and Labrador, towns use what's called a tender format. And this means you have to submit a sealed bid in a physical envelope before a very strict deadline. They open all those envelopes together at a council meeting, and the highest valid bid wins. You literally only get one shot with a tender.
And regardless of which format they use, the financial rules are incredibly strict. You can't just walk in with a briefcase full of cash, and they absolutely will not take your personal check. No way. You have to prepare certified funds, usually a bank draft from a Canadian institution. You'll need to submit a deposit right alongside your bid, which is often around 10% to 20% of your offer, or the tax debt, depending on that local town's rules. And if you win, you're expected to pay the entire remaining balance almost immediately. We're talking within just a few days.
Section 4, the end of redemption. Let's look at the post-sale rules. Okay, this is the million-dollar question for any tax sale investor. Say you win the auction, you pay your money.
Does the original owner have a legally protected period to swoop back in, pay off their old debt, and rip the property right back away from you?
No. Zero. There is absolutely zero post-sale redemption in Newfoundland and Labrador. And honestly, this is a massive distinction from other jurisdictions where an owner might have 6 months or even a year to reclaim their property. Under the Municipalities Act of 1999, once that hammer falls or your tender is accepted and the deed is transferred, your purchase is absolute. It is final.
Let's clarify this timeline just to make sure there's no confusion. Pre-sale. Right up until the literal moment of the auction or the tender deadline, the original owner can totally walk into town hall, pay their debt in full, and cancel a wholesale. And honestly, that happens a lot. But post-sale, the absolute moment the municipality executes the deed to the new buyer after full payment, it's done. The original owner's rights are completely extinguished. Your purchase becomes definitive immediately.
Section 5. Practical Investor Guide. Let's get into the technical playbook.
If you're actually going to pursue this, it basically comes down to 4 steps. Step 1. Actively monitor the NL Gazette and local papers to find the notices. Step 2. Immediately reach out to the specific municipality to request that official tender or auction package. Step 3. Conduct intensive local due diligence. You have to know what you're buying. And Step 4. Submit a completely flawless, legally compliant bid with your certified funds. Finding the opportunity is literally just the first step in a very rigid process.
Now, I want to specifically address international buyers here, including the large number of foreign and Brazilian investors looking at the Canadian market. This process has some severe operational barriers. Since municipalities require Canadian bank drafts in Canadian dollars, trying to wire funds from overseas at the absolute last minute is a recipe for disaster. Cross-border transfer delays will absolutely cause you to miss those strict deadlines. It is highly advised that you secure Canadian legal representation to hold your funds in trust and get those local bank drafts cut on your behalf.
All right, our final section, Section 6, Risks and Legal Disclaimers, what you need to know before you buy. Listen carefully. You are buying these properties strictly as is, where is. The municipality makes zero guarantees. None. Not about the condition of the building, not about the land boundaries, not even if the place is habitable. You could literally be buying a swamp. Or worse, a property with hidden environmental liabilities. And if you buy it, guess what? That environmental cleanup bill is now yours. Also, while tax sales generally wipe out mortgages, certain provincial or federal crown liens can actually survive the sale. You absolutely must do your title searches.
And as we look at this disclaimer straight from our sources, I really need to remind you, this visual guide is purely educational. We're basing this on the Municipalities Act of 1999 and the actual observed local practices across Newfoundland and Labrador. But because execution varies so widely from town to town, making assumptions can cost you dearly. Please always consult with a qualified local real estate lawyer before putting a single dollar on the line.
So what does this all mean? Well, the lack of centralized transparency definitely keeps the competition low, and that zero redemption period means your victories are absolute. But the process is incredibly unforgiving. Are you ready to navigate these decentralized, highly localized risks to secure the reward? If this explainer sparked your interest, your absolute next step should be finding a Newfoundland and Labrador real estate lawyer today to start building your strategy. Thanks so much for learning with us, and happy investigating.